All right, welcome back to the Financial Summit YouTube channel. We are back for our weekly episode with the super knowledgeable Mark Wood. Mark, hope your week was absolutely excellent. Hope you had a good Labor Day weekend. And we are back. Time just flies. We're just 1 week away from the Unconfiscatable Conference in Las Vegas. So you will miss that, but I am expecting you at the Financial Summit in the Maldives and maybe join me for one of my Rotan getaways. How you been, Mark?
I've been fantastic. Florida Gators crushed Samford University for maybe the only win of the season this year, but we'll take it.
Well, hey, at least you guys won. Let's not talk about Florida State against Georgia Tech or whoever they lost to. So my college football watching season is over. You start off ranking 10th, and now you're like 110th.
Well, I'm not gonna mention my Gainesville friends uh, being quite happy about what's happened to FSU in the first couple of games of the season. We hope it
I didn't
continues.
even. Well, what happened in their second game? I didn't even watch it.
Um, this Who did they play the second game? It was
I didn't even pay attention. I'm like, okay, their season's over.
it's over. Well, the thing with UF is we had a terrible offense, terrible defense last year, zero progress coming from the coach like the first couple of games, and we have the hardest schedule in college football this year. So um, we've kind of
All right,
perused.
that's okay. I think you guys didn't you guys recruit that high school basketball player that's like 8 foot 9 inches tall?
Yeah, yeah, and I think there's a 7 footer on the team too. I think he's 7'6", and he dwarfs the 7 footer on the team. So we're becoming more of a basketball school anyway.
All right. Let's get into the charts. You know what? Let me do screen share since I didn't do a show this morning. I'm just gonna do a 5 minute update. Uh, and then Mark is gonna do the majority of the driving here. Look, the weekly chart is looking very weak. We had this downward channel, and we're now sitting even below this channel. Yes, we are having a decent week so far, but until this week, gets us into the middle of the channel, which is all the way above 60,000. The weekly chart is not that impressive. We still need a green star candle as well. And we're still weeks away from that. I'm hoping to pick up Bitcoin on a on an MRI buy uh, with a weekly scale, but that means significantly lower prices, closer to 50,000. And I don't like double bottoms, so I really want to pick up Bitcoin around 51. Otherwise, the last place I want to pick up Bitcoin is at 49 or 50. I don't want it to go lower than 51. Ideally, I don't want it to go lower than 52. I want to see capitulation reversing at 52. Otherwise, I want to see it go all the way down to 44, which creates probably the perfect buying opportunity. In hindsight, Mark was right. I should have never went long right here. He did say I'm going long a bit prematurely when I went long around 62, upper 61s, lower 62s, because I was very confident that we did close the 4-day chart above the long-term moving average, but the long-term moving average was never rising. And the following 4-day candle, we got smacked down, closed below all of them. I held out a few more candles, but that was pretty much it. Had to throw in the towel eventually. Mark, if you can elaborate on the situation, maybe in
Yeah,
a minute, I'm happy to get your take. Would you be short here, according to Tyler's Consensio? Because look, we're below all the moving averages, they're all dropping, and they're all one below the other. Yes, we're having a decent 4-day candle, but I don't have a lot of confidence here at all. My confidence is only coming back, in the same situation, right? I need the same exact candle as this one was. The candle on August 20th, the candle that opened, I can't see my prices. The candle that opened at 59 and a half, and the candle that closed at 64,000. That was the candle I was super bullish on. I need another one of these candles, but this time I actually needed to close higher than that candle. So I need this candle to actually close above 64,000 to give me a higher closing high. This candle never did that. That candle didn't need to close above 64,000. That candle needed to close all the way above 68,000, which it never did. The next candle only needs to close above 64.5. I'm going to come back to that chart in a minute. Here's the daily chart. We had a good day yesterday. We did pull back at the end of the day. Again, nothing impressive here on the daily chart. It's just a dead cat bounce into the lower level moving average, which is currently sitting at 59,000, just under 59,000. And only with the break of that moving average can we start speaking bullishness. I was hoping to get an MRI buy on the daily scale for a buying opportunity, but we've broken the count, but we have not yet made a green star candle. So if we go back down and start a new bearish count to the downside, that next count might time it with the weekly. Though the weekly still has maybe 3 more weeks to go, the daily count could get us there in 2 weeks. But if we chop around for a bit and then start the daily count, the daily MRI buy could line up with the weekly MRI buy, and that would be which week would that be? This is September 9th, 16th, 23rd, the last week of September into early October. Okay. All right, Mark, I'm not going to go into the short-term chart. It's just jumping around. Give us your take with my Consensio chart open. Feel free to call me an idiot at any point. And I'm going to drop this arrow because it's kind of irrelevant right now. Give us your take on this, and then I'll hand off screen share to you, and then I'm going to go make my tea.
Okay, perfect. I would not be short for a couple of reasons that are not necessarily technical. They're more cyclical. We just reached the end of a 60-day cycle, and it timed the bottom almost perfect. We can take a look at that. So I'm currently not expecting lower prices in September. We can talk about what might happen in October later, but also by mid-September is typically when we do see lows. This is, I mentioned, I believe, on the other stream, September is typically a bearish month from a statistical standpoint. 10 of 14, and now maybe 11 of 15 have been red, negative months. But that being said, I did bring up that in election years, 2 of the 4 that were positive happened in election years. So it's possible we finish September positive. I'm not seeing that happen right now, but typically mid-September we do find lows, and we just finished the 60-day cycle. So I wouldn't be short. I would just kind of be waiting for strength. And also, if you look back in history, October's typically are about a 20% positive month, and November's are about a 45% positive month. Of course, there have been negative Octobers and negative Novembers. This is just the overall average. So I'm actually kind of bullish, thinking we just printed a higher low, maybe the first higher low in a long time at that 52, 53K range, and might be setting up to consolidate and get some strength in October. That's my take right now.
Oh, sorry, I was muted. Yeah, no, I agree. I'm expecting October to still be a very bullish month, but that's your analysis of why not short. Now, what about the long side of things right now?
Okay, well, the long side, we can take a look at something when I share my screen on the MRI that actually, like, I actually physically bought, or I bought spot Bitcoin, where the tone base system would have suggested not to, and maybe to even be short. But I can show that. So I actually really liked that bounce down to 53,000. It was exactly where I was looking for support to form. And if that area is lost, then I will begin to get kind of bearish. And I don't know if that 50K would hold, that 50K low would hold. So I would be long, not based on Consensio or anything like that, but based off of what I saw in the MRI daily. and holding. But it literally was a perfect Tom, put the MRI on daily. See the MRI accelerator on the red star candle.
Yeah, it never closed below it, so so that line is still intact.
That line is still intact, but this is just a risky pattern that I have seen with MRI and TD sequential, where if you're coming into um, a buy, kind of where your green arrow is, and there isn't a major or significant correction, meaning like 2 or 3 candles going above the 9, and you get a red star candle, or even going into the red 3 count at that support, that is often a bear trap. The price very often wicks below there, setting a bear trap and reverses. Now, it might be a dead cat bounce, but that wasn't the only reason I bought at 52.6, but it was one of them. The other one was just a major moving average on a very high time frame that I've been watching for a long time, was right there as well. So I see this as really important key support for Bitcoin coming into the end of September into October.
Sure. Now, 52.6 did not give me any signals to buy
I know.
on my charts.
I know. I'm just saying it's something that I've observed through the years, and well, the thing is this. It's actually if you're actually trading, it's really easy to manage risk because you're at a very low risk zone there. Even though it's a red star candle, in theory you would have shorted um you would have shorted below maybe the low of the candle prior to that, and you would have maybe taken some profit right at the support there. But this isn't part of your system at all. It's just something I've observed, and the same thing happens to the upside when you're running into a buy or a sell, and there's no correction, and it runs to a green star candle. That usually is a bull trap on the other side of things. But you have to have that accelerator there, the MRI accelerator in the vicinity. Those have to be there.
Right. So what I did, Mark, I got out of my long positions here, but if
Yeah,
I was shorting, you are correct. My short would execute uh, near the break of that candle's low. So my short would execute at around 55,600, 55,700. I got out a little bit above that. But when I'm thinking long, I'm not going short, right? I don't trade like that. I used to trade like that, and that was responsible for a lot of losses.
yeah,
And so when my brain is looking for longs, I don't touch short trades. When my brain is looking for shorts, I don't touch long trades, right? Only when my brain is looking for the 10 a.m. reversal, my brain is thinking in both directions, long or short. Because in my experience, one of the worst things a trader can do is looking for long trades and randomly decide to go short. That creates a flip-flop situation where then he realizes he made a mistake and then he flips long, and then he realizes he makes a mistake and then he flips short. And this creates a very unhealthy trading pattern that only leads to losses compounded upon losses. So if I was looking for short trades, you are correct. I would be looking at a short trade here below 50, around 55 and a half. And what would happen is my stop loss would be hit either at 55 on the way back up or at break even, and I would already be out of that short.
right. I would, if I were short, if I had taken that short, I would have taken some profit at that support right there. Maybe 30%. Just you got a nice swift move in your favor off the short, take some off the table. That is off of the strategy of trading in the zone. he always, which is a fantastic book for people who are might be interested. There, I do believe there's an audiobook version of it as well on YouTube. I think I listened to the audio version. But one of the things he talks about is when you are in a trade and it happens to make that first move in your favor, even if it's not a gigantic move, take 30% out, and then you can lower your stops. And at that point, you're like, or raise your stops, and you're risk free. Like you've made a small profit and you're risk free, and you got 70% of the position still open. And I really like that strategy. It prevents you from giving up gains. Like had you not taken any profit on the short that you mentioned, let's say right at that 53,000 support, well, you wouldn't have lost money, but you basically would have kind of gotten stopped out with a small profit, probably, correct?
Well, right, but there's a reason for that, right? Because I don't take profit on the same candle, right? Like if I was trading the 4 hour candle, yes, there would be profit involved. But if this is a trade using daily candles, I never take profit off set candle. And if you've seen enough of my the videos where I do the 10 a.m. reversal stuff using 5 minute candles, I always use how that candle closed for future stuff. So I would need a lower low than set candle, right? Now, again, if I'm using daily candles for this trade, if this trade involved shorter term time frames, then yes, there would have been profit taking because that last candle would have gotten us lower lows, right? So my profit takes and stop losses are based on the prior candles, highs, lows, and bodies. And I never do anything on set candle.
So I want to make one thing clear. When I said I bought that MRI support there, it was spot and it was not a lot, and it was money it wasn't a trade. I mean, it's a long-term trade because it's more of like a swing position, adding on dips to what is, what I'm looking for, assuming we are going to continue with the bull run. So even if the price had dipped below 52 on that buy, I would have been okay mentally and financially. It was just a strategy. I have developed a very good knife catching strategy. It has nothing to do with going long on a swing trade into strength. It's a little complicated and it's hard to explain, but it's just, for me, it's kind of fun. It's like a video game for me. When we get these crazy price drops, I just wait and I look to where I believe I've identified support, and then I drop to lower time frames looking for a reversal. Usually that's around the 15-minute chart for me. So I just want to make that clear. But yes, I did buy that dip, and I also bought the 50K dip as well, based on some knife catching dip buying strategies that I have. So, but yes, right
All right,
now,
so Mark, real quick before I hand it off to your charts. Going back to the 4 day Consensio, which we both use, I
yeah.
use the moving averages of 3, 9, and 30. What should the position be based on Consensio 4 day chart?
Cash.
Okay. I'll leave you with that one word answer. I'm gonna stop my screen share. Floor is yours.
Okay. Yeah, I mean, I say cash because or let's say you didn't completely exit on the Consensio rules with the price dropping below. I would be holding cash and selling into strength until the price is back above um that long-term moving average. And also, here, let me share screen anyways, because I'm on my Consensio chart. So real quick, this is just a really basic, simple look. I believe I brought this up on the other streams. So this is Consensio long term. So this is the 30. You and I use the exact same long-term moving average, 30 SMA. But this is on the 2-week chart. And I have found I have found that the 2-week chart, Tyler Jenks looked at the weekly. You and I like to look at the 4-day. I believe that the 2-week chart gives us the absolute most conservative possible look we can get. I like the 4-day because it gets us into the longs after the bear markets way sooner than the weekly does. But we can see here very clearly, if I zoom in back to the bull market in 2014, there was this massive double parabola that happened up to the 1200 top in December 2013, and then a drop, and then a lower high, and then we can see the price really trying to fight. Even back then, even in 2014, I believe this moving average was very relevant. And then as soon as we got one close below, usually I like to wait for at least 2 closes below on a 2-week chart. So far throughout history, we just need one. And then that propelled Bitcoin into the bear market, sideways consolidation, first close back above in October 2015 at $300, and the bull market resumes. Moving forward off of the 20K top, we can see the price trying to hover above this support. One candle closed below, and that sealed the deal. And then, of course, we had this fabulous descending triangle. And then out of the bear market, the first close back above, get a nice little run. And here's where this to me shows me so clearly how and why this moving average is so relevant. It tried, it did hold four tests. And then that got a nice bounce from 6,500 up to 10.5K. And then we had COVID. So and then out of the COVID bear market, we can see the price consolidating right on the moving average in April 2020 at 8,500, and that secured things. Also, we can see the 28K bottom dipping right to the moving average, and then off of the 69K top, one close below, and the bull market is over. So very clear to me that 50,000 and rising is becoming a very, very key bull market support zone. There is a scenario to allow for a wick below there into 47K, and that is only based on one chart pattern that I've been watching. However, as things stand now, we're still generally bullish. We've got the black moving average trending up strong, and as long as we're not seeing the price close below here, I still perceive Bitcoin to be in an overall macro uptrend. Okay, so what do you think about that, Tone? That's a much different look. So on weekly, we're bearish. Let me add the other moving averages that I like to use.
Yeah,
I
that was
used
a
to
really good chart, really clean moving average. And it looks like every time it bounces off of it or
yeah
touches it, it's kind of a preview that things are already in trouble. And if it doesn't make a new high after that,
yes
shit tends to hit the fan. So if we end up hitting it, we better make a new high and a substantial one, not just a $5,000 more high. Needs to be like $25,000 more. Otherwise, it's going to be another double top, similar to 2021, which would make it a quadruple top technically.
Well, and you and I mentioned, I believe on the last stream, that time is becoming a factor, because if we do not see a bullish October and November, and we're just staying sideways at the price, lingering at these between, like, let's say 50,000 and 60,000, high time frame moving averages are going to begin to roll over and cross bearish, creating a lot of resistance in the 62 to 65K range. And we could very easily see Bitcoin slipping into a bear market without some strength. So I really am looking for this 52K, 53K low to hold, perhaps maybe the first major higher low printed in a long time. Here was a higher low in May, down to 60,000, bouncing back up to 71,000. But we can see on this chart, this is the 2-week chart, just lower low wicks, lower low, lower low, lower low. So this is promising, But the other thing is, like I said, this is the most conservative look we can go with. Let's go back to the 2016 bull run out of that bear market. So we got the close above the black, and then we got the yellow 21 crossed above. This is the moving average I've added, and then the blue, and then we get the black moving average curling around, and all moving averages postured perfectly. So that is what we are looking for. With that simple analysis, it states very clearly we need to see 2-week candles, weekly candles closing above, let's just call it 63,000, long enough to pull these moving averages back above it. The posture we're looking for is black, yellow, blue, and gray. And that would be 30 SMA, 21 EMA, 10. I used the 10 and the 3. You use the 7. But they're basically the same. So as from this 2-week standpoint, we're fine. Price is fine. I still see the price.
Oh, Mark, no, I use 9. I don't use 7.
Okay,
Tyler used
9.
to use 7. I use 3, 9, and 30.
3, 9, and 30. Okay. So I still see, I still believe that, let me get rid of the bands. We don't really need those right now. I still believe that this broadening pattern is valid, and we've had 5 touches and several touches on the bottom. This is the only way I do see a target at 47,000. In fact, my quarterly analysis says 47,000 is still in play, and I'll show that in a minute. However, we would, exactly as you said, Tone, we would need to see a massive move, bigger than this move, off of 47,000, back up to at least 60,000 very quickly. And if we see that into November, into the election, I'm bullish. So I do agree with you. I don't see strength yet in Bitcoin. I'm optimistic of this higher low, but this is a pattern. So Peter Brandt put out a tweet. He was looking at Bitcoin versus the gold chart, and he is viewing this going all the way back to here as a massive inverse head and shoulders pattern, which I do agree with, but I have been looking at this more.
When you say this, let's try to use prices and dates, right? So basically everything starting from 2021.
Well, basically,
top.
Basically for everything including the 65K top. Okay.
Right.
But so he's kind of calling it a complex, massive spread out inverted head and shoulders. I think a more accurate depiction is something more like this. I believe
a cup and handle.
A cup and handle with this broadening wedge, here acting as, see, people are looking at this as a bull flag. I don't see it as a bull flag. And they are also looking at it as maybe like a channel. To me, it is just such a clear descending broadening wedge because we have lower highs and lower lows. So we are in a downtrend. We talked about this on the last stream. Weekly is in a downtrend, and until we print a higher high above 65,000, the downtrend is intact. But this is the massively bullish side of what we could be looking at, because the target, the measured move target just simply for the broadening wedge is conservatively at around $88,000, $90,000, right? But if we're going to try to put on a measured move, and let's be conservative, like I could bring it all the way up. No, let's just do it, because that actually where it would be. This propels Bitcoin into $300,000. And
right. Well, that's not my conservative. I actually talked about this on a prior channel. For me, the conservative move would be using the nominal prices instead of percentages, right? So The most conservative is a $30,000 or $35,000 up move, not percentage based.
Got you. Yeah. So basically taking the price from 15,000
Oh,
up
15 to 68, right? So that's more than 35. So that's 50,000 move. That's a
50K.
$50,000 move. That's
So
to me, that's most conservative.
I
Using uh just
yeah,
identical price moves.
I like that. So that would bring the price, let's say breaking out at around 68K, 70K, right?
Right,
So we'll add 50K to that up to around here, right?
right.
Yeah. Which is getting close to where my long-term projection has been. I'm still holding to 150K. And that is simply based off of uh based basically based off of this Fibonacci retracement. I'll draw a horizontal. Um, so I just created a Fibonacci from the top in November 2021 at 69K down to the 15.5K lows. And we've got the 1.618, which Bitcoin has always trended at least back to the 1.618 and has typically spiked up to the 2, dropped back down to test the 168, and then goes up to these other extensions. I am still looking for the 2.618 extension, and that would be assuming we are continuing with diminishing returns, because I do believe the last top topped at the 3.618. I can check that again. So I'm looking one level lower, and that 2.618 extension sits at 155K. So that has been my long-standing target based on historical patterns and what to potentially expect. Of course, that is not considerable until we're seeing very consistent closes above this prior all-time high. I'm talking about 3, 4, 5 weeks consecutively closing above 70K. So what are your thoughts on that analysis, Tone?
I like it.
Yeah,
It
excellent.
makes sense.
Yeah, so we have this broadening wedge. It's still intact. It can withstand a drop to 47K-ish. We need to see a very strong reaction off of there. Otherwise, it's possible, Tone, that this just meanders around and actually finds it as this drops down to where you're talking about, more into the 44K range, right? If I drew a horizontal ray from this layer of support right here, which was created in December of 2023, right at around 44, 45K. Yeah, we could possibly see that. And we talked about this on a prior stream. We talked about the possibility that we get a bearish October and November right into the election. So I've got the green horizontal is marked as the election. Is it on the 4th or is it on the, do you know what day specifically it is? It's Tuesday.
Something like that. It's around third, fourth.
It'll be a Tuesday. Yeah, it's that week. It's the week of the 4th.
Yeah. I mean, honestly, I would be surprised if we keep going down into the election, but no matter who wins, it's going to be bullish for Bitcoin. I mean, you have two candidates. One that is actually sounds like he might be favorable towards Bitcoin, and that's bullish for Bitcoin. And then you have the other that is straight up from the Communist Manifesto by Karl Marx, which is also incredibly bullish for Bitcoin, right? So it's no matter how you slice it, the policies after the election will favor Bitcoin no matter what. Like imagine if unrealized capitalized gain taxes actually come in to the system, right? It's I mean everyone's gonna hide their money in Bitcoin.
Yeah, so check this out, Tone. Speaking of the elections, I've highlighted this will be Bitcoin's 4th election cycle. And I just have highlighted with the 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 green verticals here, where around the election. Okay, I have them late October, so we can fudge that a little bit, but we can see clearly what has happened to Bitcoin after every single election it has been. Now, this has been a Democratic candidate in 2012, November 2012, a GOP candidate. Oh, I'm sorry. No, yes, GOP candidate, and then a Democratic candidate as well. So two of the three have been Democrats, but it doesn't matter. Bitcoin has trended up after the election each time. So even if we do get this sideways drop and that broadening wedge comes down into this 44K range, man, that could potentially, it would be scary. People will be talking about bear market and Bitcoin's dead, and the ETFs have failed and blah, blah, blah. But I agree with you. I would still be looking for 2025 to be bullish. And part of that is because I just don't see anything bearish in the S&P. It topped and it's correcting, but the monthly closes were bullish. Quarterly close is going to be bullish. Probably the end of year is going to be bullish. So I'm kind of with you. I'm kind of with you on that. What do you think? So let me ask you this. Oh, let's do this, Tone. Let's take a an estimated guess on what we think the price of Bitcoin is going to be at the elections.
The election, I think it'll be higher than current price. That doesn't mean that the low won't be made by then. I find it hard to believe that markets are not going to be rebounding in October, whether they're stock market or Bitcoin market. So I'm still expecting that if the low was not made, if the low was not made back in August, right? That's that candle, the sweep low to 49. If this low does get broken, I expect it to get broken this month, not in October. I mean, maybe very early October. Either way, I'm expecting us on the trajectory upwards by election. So uh, it's really impossible to say right now.
It
Uh,
is. This is total.
I think we're gonna be in the $50,000 range the day of the election. That's the most likely outcome between 50 and say 65, probably between 50 and 60. I think we'll be in the 50s, but the low would have already been made. That's my opinion of going into the green line.
Okay, I'm going to make a little bit more bullish prediction. I'm going to predict the price is going to be at least $65,000.
That'd be nice. I'd be
into the
happy
election.
with that. I'm a little
Statistics,
more I'm a little more pessimistic right now. This chart looks like it wants to hit that black line one more time. The sooner it hits it, the better.
let's see.
No, the other black line,
No, I
the
know.
downside.
I'm just looking. I I'm basing that there. Of course, some of it is guessing, some of it is just using probabilities and statistics. And from from the current price range, October's average gains are 20% average gains. So if I put an average move, let's just do it off of these 53K lows up to 20%. Yeah, that gets it right around 65K. So I'm gonna stick with that. I'm gonna say around 65K coming into early November. So, but I'll put an eyeball right up here. And then if we get the post-election November 40% move that has played out, then this measured move is going to happen perhaps in November. That's a 35% move. And I took that, I got this measured move basically measuring, and I was conservative. Again, I didn't swing it all the way down to this, but basically for the measured move of the broadening wedge, you take the high and you go to the lows of the wedge. I could get aggressive and bring it all the way down to the wick, but I'm keeping it more conservative, just kind of looking at this area here between July 2024 and where the price is now, with the lows ranging between $54,000. Okay. And then I just take that to where we might see the breakout happen. And that takes the price somewhere into the $88,000, $90,000 range. Assuming this pattern stays intact. So there's our bullish thesis for what perhaps to expect in Q4. Do you have anything to add to that, Tone?
No, I'm expecting a very bullish Q4. It's just been a very frustrating Q3.
It has. So let me get rid of the drawings and just take
Yeah,
a
I've
look.
I've always expected a bullish Q4. It's just like I said, Q3 has been really, really frustrating.
It's been brutal, but it's not uncommon. So if I put on my favorite moving averages, here you go.
All right,
We can
I gotta boil some water, Mark. Keep
okay,
talking, but I'll hear what you have to say. I just
gotcha.
won't be angry.
I'm just gonna take a quick look at what I perceive is happening currently in the price, and I'm on the daily chart, and I have three moving averages pulled up. They are all Fibonacci number exponential moving averages. The orange is the short term, the gray is the 8. It's an 8. The gray is the 13, and the yellow is the 21. And this is a really clear demonstration of why I'm so addicted to these moving averages, because they are so relevant, and they have been relevant in the S&P for 100 years before we could ever track these things. Well, I'll probably do a show on that at some point, but let's just take a look at what's going on currently. We established a low. I'll talk about that in a second. Swung up all the way to the 21 EMA, which is expected resistance on the first pass off of a bounce. We've seen that 3 times now. Rejection off of this bounce, rejection off of this bounce in early September at 60K, a third rejection at yet another lower high. So we're still just printing lower highs and lower lows. Daily is not back into an uptrend. I would like to see the daily swinging at least back above $60,000 for a higher high. However, being said, we do have a nice close. If we look off of this drop of $64,000, there have been 0 closes above the orange 8 EMA until yesterday. So that is a change of behavior. That gets our attention. I would like to see this candle today close. I would like to see 3 or 4 candles closing above 56,000. But now it's very easy to see that the 13 is resistance, the 8 is support, and price is going to get squeezed in between the two until one gives. So eventually we are going to start seeing daily closes below 56.5 or above 57.1. At that point, we're going to target 58K again, or try to find a higher low down here. And if I add the Bollinger Bands, I'll show you something that was getting me bullish off of this low right here. So if you remember, so this low on the 6th swung down to 52.6. And it was bearish because it was a strong close below the bottom Bollinger Band. What I look for at that point is a test of the lower band and either lower or to begin to try to close higher, close back inside the band. So we can see on this swing low drop, we've got the close below. There was a bounce. Here is the test on the very next candle. Here's the test of the bottom band on September 7th, right at 54.3. Almost closed above it, so I'm still not bullish. Now we start getting closes inside of the band. So now I will start looking for a local bottom. And I'll show one other thing that has been really effective in the last couple weeks. So then this might be the low. I'm going to look for this swing high of September 7th to get taken out, which was at $55,000. At that point, the short-term moving average becomes the target. So this is a visualization of how to try to identify a local bottom, and it works the same way on any time frame. So now, what has to happen to even consider a reversal are closes above the short term, which we're getting now 1, 2, 3, 4 closes above. So we can see the price is going to try to test this area at 56,000 as support. If it doesn't hold, it's going to reverse back down. But let me go to this Heikinase chart real quick. Here it is. So this is very, very simple. And it has been working since January. It has basically been working all year long with very, very few exceptions. In fact, I really only see 1 or 2 exceptions. And it's very simple. When you have a string of Heikinase candles, the moving averages don't even matter right now. But when you have a string of Heikinase moving candles closing red, what you look for to consider a low is wicks closing higher than the swing low. Even if the candle is red, that's fine. And then you look for 1 green candle close, and that gives you a possibility of getting a bounce. So this did confirm a low. So this basically swung the price from 57,000 up to 63,000. That's a decent move off of that low. And we can see the same thing here. There was a couple of strings of red candles. A green candle close presents with the wicks higher, with higher high wicks, and the green candle, that green candle on July 9th perfectly called the bottom of that drop. And that saw a move at that point from $57,000 up to $68,000. Now so yesterday I was observing here. Let me zoom in. So we had this wick on the kind of the capitulation drop down to 52.5. So I was observing these last two, the next 2 candles on the 7th and the 8th, with the wicks closing significantly higher than that drop. So I was like, okay, maybe this is the low. And then yesterday we got the green candle close. So now we do have the possibility to form a long-term low, but at least we knew that the local low was in. And we can see on this that the price is being rejected. These 2 moving averages here are the 12 and 26 EMAs. And this goes back to this is also why I said cash tone, because this is another Consensio type system where you're in cash as soon as the moving averages cross bearish and a candle closes red. So and with this system, what you can do if you want to try to preserve. So going back, right here, you would have been long right here at 62K in mid-July. But let's go back to where this initially got you into the trade, which was in mid-October 2023. Let's call it at around $31,000. It kept you in all the way until June with this, but you're not exiting yet right here. You could perhaps take some profit. You're actually waiting for the bearish cross. So now you've given up a lot of gains because you've watched the price drop from 74 to 57. However, this is kind of how Consensio works too. It's just trying to capture 80% of the move. So what this is telling us is we're out. We've got the red cross below the black. What needs to happen is 4-day closes above $61,000, long enough to pull the red back up and start printing green candles again, and then you would start entering. So this system is just saying, hey, we're in a holding pattern until the price of Bitcoin is at least above 61,000 for the better part of at least a week, I would say, probably longer. And the other thing you can do with this system, if you want to be risky, is once you get this signal of the red moving average crossing below, you can short bounces into these moving averages right here. Now you would kind of need a wide stop right there to avoid getting stopped out. But that is where the short is. The short is not on the drop because it's too late there. It's shorting into strength. And I do believe Bitcoin is going to be a short into strength until at least above $61,000. Do you agree with that, Tone?
Yeah, I do, which is why the last time I kind of went long above 61,000. I still have that same target. Though last time I could make the argument that I should have waited till 68. But this time, if we're back to 61, 62, I'm bullish because that's where the last high was.
Yeah. I would start to get pretty bullish seeing closes above 61. Okay, let's take a look
Either
at this.
either that, or I'm happy to catch the falling knife with the weekly MRI buy
Yeah,
uh, in the low 50s or ideally mid 40s, right? Like the bigger the capitulation crash into the weekly MRI buy, which is happening the last week of September, that allows me to catch the knife. But that's it. That's the only knife catch I'm gonna make is very early October and at new lows. Otherwise, I'd rather wait for new highs.
totally agree. So let's take a look at this real quick. I've mentioned before, I have believed for quite a while that Bitcoin has been in a reaccumulation pattern. Here is the Wyckoff schematic. So now I've got some more clear information. I was thinking a few streams ago, it might be in this phase D. However, with this drop down to 52,000, 53,000, I believe it's more like in phase 3, and we just got the test. I'll show that in a second. I was thinking perhaps the drop down to, I can't remember, 56,000 might have been the LPS. This stands for last place of supply. This is a test after the spring. The spring you can kind of look at as a capitulation, and you're looking for a massive volume spike on the spring, and then it's going to run into resistance and it's going to test for one more level of support. So now if I go back to the chart and zoom in on this particular pattern, we can see this, the volume on the spring was very good. It's the largest spike since coming up to the top, going into the strength. This was the first sign of strength into the accumulation range. So now this red horizontal at 53,000 is very random. It has nothing to do with horizontal support. It just was marking my phase A, B, and C, and D, except for I did put it there strategically. However, we can see that so far is acting as a perfect test going back to the schematic right here to try to find the next higher low off of the spring. So from here, if my bullish thesis holds on, 52K, 53K is the low, and we are going to continue to print higher highs off of there. Now, one thing interesting, the reason I say it's
Hey,
reaccumulating.
Mark, can I comment on this? And this
Go
is
for it.
why. Can you zoom in on like your latest uh what do you call it, Wyckoff distribution, accumulation? I don't know. Can we talk about why I personally don't like Wyckoff is because what you have as the spring, everyone had as the spring the July low, right?
I
And
did.
this is why I don't like Wyckoff because the pattern takes too long and it keeps moving its targets. It's like Elliott waves. It's never wrong.
Well, I know exactly what you're saying. In fact, Tone, I was looking at this as a spring. However, there is a volume factor to Wyckoff. And if we look at the July drop on this low, which was at 54,000, the volume was no different than anything basically we had seen. It was zero. There's zero differences. Now, so I was like, maybe this is the spring, but I don't know. And you are right. These patterns are very accurate in hindsight. Okay, they are. However, if I zoom back out, if I zoom back out to the original accumulation pattern, I was watching this for months, and it is accumulation. It literally takes months to play out. This to me is one of the most clear. Like, look at this volume spike in mid 10th of November on the
Yeah, that's
continuation
FTX. That's the FTX crash.
50.5, right? So here was support. Support was like lingering at the lowest level at around 17,500, maybe moving it up to 19, 20,000. So once that was lost, that created a massive capitulation and a huge spike in volume. So you can see I have a question mark on my spring because we never really know for sure, except this pattern became so clear to me. And we had a bump and run off of the 69K lower high, picked it up, tested. This was the last place of supply, a perfect higher low. And then there was another accumulation pattern inside of the sign of strength over the summer, which is kind of what we're seeing now. We're not at that level. We're in the summer consolidation. So you are right, Tone. This could easily, like, if this turns back around and drops below the spring, let's say it goes into 47, 44K, I would consider this pattern to be void. And I don't know if people actually try to trade off of this pattern. To me, it's more of like a Cliff Notes version of what might be going on. That's the only reason that I like bringing it up. To me, it looks like reaccumulation at the highs, and I find that to be incredibly bullish. So until given other information, that's what I'm looking for. And if you look, I've got these horizontals marked off up here. We really can't look for strength until above 68, 69,000. And that is getting into the top of the broadening wedge pattern that we've been looking at. So 68 to 72K, we need weeks closing above there. And I think Bitcoin could go to 100,000 in a couple of weeks once that's picked up. All right. Anything else you want to take a look at, Tone? Let's take a look at this real quick.
Can we I really like your chart where you have like the 250, was it 55 moving averages, one exponential, one simple.
Yeah, we'll take a
And
look at that.
I want to see how those are crossing, and then I want to see your other chart, the one that has, like the staggered 200-day moving averages. I think those charts are really good.
Okay, so this is my post-halving cyclic schematic. We are on one.
We're not doing too well. Like we're not doing too well post halving, which is why everyone is now posting charts of since the swing low. And it's like, oh, we're doing really well since the swing low. Yeah, but we're doing like crap post halving.
We are, but this is day 141, and in the prior two halvings, it was right around 160, 165 days. Like even after 26, there was this capitulation after, I'm sorry, 2016 in August and July. There was a capitulation after the halving, minor capitulation probably, and then a buildup. So yeah, there was momentum. But the reason I have these specific times marked here at after these halvings, let me zoom in. Let me zoom in a little bit. Is to just show when Bitcoin began to start taking out the highs prior to the halving. Okay. And that was right around 162 days. And there was a nice spike, a test of that support, and then the bull market resumed. So same thing here. This was the summer the summer consolidation after the 2020 halving in May. Basically, with this little anomaly up here, the price basically traded between let's call it $8,500 and $11,000 for months, with a little bit of a move up to 12,000. So it wasn't until day 165 that these swing highs began getting taken out. So this is showing us, let's get a bullish October. And day 165, hold on a second, my mouse just crept. Day one, let's see where day 165 is. There it is. Come on, mouse. There it is. Let's get a general, okay, right here, October 3rd. So if we're going to see a similar pattern to the last two halvings, we do want to see some strength into early October. All right, we are on day 141. So let's go back. So here is my 50-55. Let me show you this real quick too, Tom. So you know how I showed us the 30 SMA on the 2-week for Consensio? We have one more moving average that is a very, very clear bull bear zone. And it is the 55 EMA on the weekly chart. We can see going all the way back to 2013. And here's some other TA. You can anticipate a fairly strong bounce the first 1 or 2 times that this moving average is tested off of a significant high. Here is all the way back off of the 2013 top, drop all the way down to 730. We can see there were no closes below, so the hopium was still there. But this was a bounce from the swing low to the swing high of 100%. That was a massive bounce. And picking the moving average back up, bull market resumes, losing it in 2018, confirming it as resistance, capitulation. So here we are. This is another reason why 53,000 is such important support. Looking back at the 2021, drop to 28K off of 65K. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks the price spent trying to take out that resistance with only one close below, and then it rocketed off of 29,000 up to 53, and then up to that secondary high. So what we would like to see right now is something either similar to this low, or perhaps can get away with this consolidation in October of 2023 with several closes below. Bitcoin during this period of time right here in October and September, October of 2023, I would say 3 or 4 more bearish weeks would have pushed Bitcoin back to $21,000. And it was very fortunate to be able to hold on with this many closes below. But we can see once back above it, we got strength. So 53K currently for me is an incredibly important area of support. Let me add the 55 SMA, and I'm going to show something to be concerned about. So here is the dark green is the 55 SMA. The light green is the 50 EMA. And this is why I believe time is a factor. Let's go back. We can see in 2021, off of the 65K top, that the light green was still postured above it, which is why it was holding a support. It is going to be stronger support with the EMA above the SMA. But let's take a look what happened right at the all-time high with one more push up. This was a warning right here. This was the week of October 11th. The price was at $63,000. We were all bullish. I was bullish. You were bullish. We were looking for 80,000 higher. However, this was a warning indication saying, hey, we have lost momentum on this time frame. The strength is waning and weakening. And sure enough, as the price dropped back down to the support with the EMA sitting below the SMA, neither are more likely to hold anymore. This area between 43,000 up to 47K, and we can see 1, 2, 3, 4, 5, 6 weeks tried to hold the 55 SMA. With the EMA cross below it, it's going to get pulled down. So I'm a little bit concerned about these moving averages right now, because if we project, I've got a lot of drawings on here, but let me just draw. If we just kind of project, that's terrible. Where's the arrow? There it is. If I just kind of draw these paths without seeing some strength very soon. Hey, Tone, let me ask you a trading view question. Is there a way? Okay, so check this out. This projects a bearish cross in October, early October.
Okay.
Which means that if the price begins to trade below $53,000, we could be legitimately looking at a bear market scenario, because throughout history, this has called the bear markets every single time. Just this one simple cross. Here it is. Here it is in 2015, 2014, taking place in July at 485. Once the light green is flipped to resistance, bear market. These moving averages stayed crossed, postured perfectly until the price traded sideways and down for too long. And we can see very clearly how this works. Once the EMA is below the SMA. So, and we got the same drop during COVID, right? So this is why I believe time is a factor, and a very important factor, and why we need to see some very significant strength into October. What are your thoughts on that possibility?
Yeah, agreed.
Yeah. Now, being said,
what was the trading view question you had?
So my trading view question is, like, if I select the arrow, right? Like I put those arrows there. How can I reselect the tool without having to go back to it? Do you know? Is there a shortcut?
What do you mean?
So, like, here's my arrow.
Yeah. You hit the star.
Hit the
Like,
the
go
what?
back. No. Go to the left. No, not there. Yeah. Go to where you find the arrow.
Right.
Click on that. Right. Put your cursor on the arrow. There's a star.
Okay.
And
Okay.
there it is. And now I drag that into the bottom row. So if you now drag you see the dots. No, not that. On the other side. On the left side, there is the dots.
On the
No,
left. Oh, here.
up. That, yeah. Drag that all the way to the bottom, and I put it like below where you have Monday 27th. I put it right in the middle.
Okay. I got you. So, and that's the
I put it in the black. I put it in a black area so it's not in and then to the right. And then I move that to the right, like it's on my right side. Because I usually have to draw, somewhere over there or in the middle of my chart.
Love it. Perfect. Okay, so
Okay.
now,
And you can add whatever you want into that line, and these are your shortcuts.
got it. So here is, we're gonna stay with this 55-55 combination. And here is where to say, okay, be careful to get too bearish, because this cross is fresh. And now there are not very many examples to draw from. We only have two, but each time propelled Bitcoin into the strongest phase of the bull market, which was back in 2017 in January, with the price sitting at the prior all-time high, very similar to what we're experiencing right now, $1,100. It took a while. It took 1, 2, 3, 4, 5, 6 3-week candles, 18 weeks to finally get some strength off of there. But then we can see off of this bullish signal, the price propelled itself from $1,300 straight up to 20K. Back here in 2020, the cross took place with the price at $26,000 and it more than doubled to 65K. So the cross currently took place in May of 2024, end of May, at the prior all-time high. We were having these sideways consolidations before the cross, but since the cross, we have had 1, 2, 3, 4, 5, 6 candles. And let me see, going back to 2012, what did I say? 1, 2, 3, 4, 5, 6. Yeah, so we're kind of getting into that timing. What we kind of need to see are 2-3 weeks, exactly like March 2017. 2 consecutive strong green weeks. And I think that would pull the weekly EMA above. It will reposture the EMA on weekly, so it doesn't get that bearish cross. So now, where is support here? It's going to be a little bit higher than that. That's the 34. I believe it's going to be on the 21 EMA. Right there. Okay. And this is another very key moving average to take note of on the 3-week time frame. Back in 2016, it never dropped here because it was always dropping to the 8. The 8 is where the dips were in 2016. And also in 2020 was so powerful, it never even really made it to the 8, which is why it was not support the first time it was tested off of 65K. However, when I zoom in, looking again at that key support of the 28K lows, it was holding closes above the 21 EMA, allowing for dips below. Here is my analysis on this chart. Every single time in history that the price has trended to the 34 EMA, it has been a bear market every single time. Here's 2018, and look how that moving average was trending right at that $6,000 range. So once that was lost, but the point is, once the price has gotten there, the bull markets are over. Same thing in 2014, sorry. Once the price has made it to that moving average, 15 September at $400, it was silent night. So this tells us, according to history, of course, all these patterns are going to change as Bitcoin matures. But what this shows us is if we do not see 3 weeks closing above this 8 EMA, which is right, let's just call it 60,000. 60,000 is a key price range on daily. And this continues to resist all the way down, and it pushes the price below 51K down to mid 47K. We have to be super cautious. And what I find interesting is, I don't have the wedge on this chart. This moving average that I'm calling the warning moving average is going to be the bottom of the broadening wedge. So that is the only scenario I see with the price of Bitcoin dropping as low as $47,000 that it survives and stays in the bull market. It's only that broadening wedge pattern. That's the only thing I see in the charts that tells me it can drop to mid 40Ks and still maintain bullish structure. But history says we would like to see on the 3-week chart with the golden cross in place, we would like to see the 21 EMA holding, which is basically 52,000. What are your thoughts on that high time frame analysis, Tone?
Yeah, no, really, really good.
Okay, real quick, let me get rid of these and let's take a look at 200 and see what we got going on. Purple is 200 EMA. Black is 200 SMA. I probably need to go on 4-day. Okay, here you go. Bullish. I like it. We got a fresh bullish cross right here. And this is a cross that does not take place very often. So this is the EMA climbing above the SMA of a 200 period look back on the 4-day chart. And that cross took place early August. And what's really interesting, Tone, is when you have these massive moving averages cross, they are going to pull the price into the cross, and it doesn't matter what the time frame is. If I go back to here in January 2021, end of December, we got this bullish cross at a price of 42,000, which led to a drop of 30%, right? Now, who in the hell is going to be looking at the 200 EMA crossing above the SMA on the 4-day chart? Nobody except for us, except the TA is the TA. It doesn't matter what the time frame is. It's just a weird characteristic that happens with these sweeping moving averages. And we can see the same thing back here, Tone. In 2017, the bullish cross took place in early April. There was a peak high of $1,300 back to that prior all-time high. And then again, a drop from 1,300 down to 900 for 33%. So are we surprised to see a drop from 60, 70K down to 50K for 30%? No. It's literally exactly what has happened every time we've gotten that cross, right? Isn't that crazy?
Yep.
So this is bullish. I'm still holding on to my idea. Taking on October's are bullish, November's are bullish, post-elections are bullish. We've got these bullish crosses sitting early. I still believe Bitcoin is getting ready to propel itself into the strongest phase of the bull market. And we have some very clear levels. This is one of my goals, like when you and I do these streams, is to define levels. So 52 to 53K is incredibly important support. The next level down is 51K. And then below that is 47K. Those are our levels of support. And we know now that losing 50,000 down below 47,000 gets dicey for the long-term structure. There's possibilities that the price survives, but we have to be careful. So now let's see real quick what moving average is holding that price. It's probably going to be the 89. Yeah, it's the 89. So we can see if we look back. So I am viewing this current price action as a combination of 3 cycles, and I'm viewing it very similar to the drop from the initial top at 65K down to 28K in July 2021, and that summer drop. Also very similar to the consolidation of the summer of last year. But this also shows us, this is another major moving average that shows us once the price gets there, the bull market is over. This is the dark blue moving average. These are all Fibonacci numbers, and they're all EMAs. This is 89, light blue, dark blue is 144 EMA. So who the hell looks at the 144 EMA on the 4-day chart? Me and you. That's it, right? But we're kind of bringing some really interesting information to people, because if we look through history, every time the price has made it down and closed below the blue, the bull markets have been over. So again, this helps us define $48,000, $50,000 as a key range, and we can see it happening right here. In April 2022, off of the 69K top, price is now bouncing between those two moving averages. Bull trap, swings below, and now they're postured down. So we don't like this. I don't like seeing this purple 34 postured down, because we are in jeopardy of seeing something similar. Like this is what we want to see, Tone. We want to see this area established as support. There were never more than 3 closes below this moving average. Well, maybe this one was, but we don't want any more than 1 or 2, 3 closes below. And then this moving average was trending down, except once the price started basing off of it, it finally postured it back up again. So this analysis tells us what we are looking for is, once again, that magic $60,000 price range comes in. We need 4-day closes above 60K long enough to flatten and curl this moving average back up. So at that point, and let's not forget, here's our bullish cross right here, 200 EMA above 200 SMA. We want to see moving back above 60K. That's going to accelerate the EMA, and the wider apart they get, the stronger the time frame becomes. All right, I think that's about all I have for today. There are other things to look at, but we can I'm just in the oil and maybe Bitcoin dominance, but we've covered a lot on Bitcoin today. I'm good if you are.
Yeah, pull up a little bit on the stock market. Pull up an oil chart, maybe stock chart. I mean, there's not much to say in gold. It's bullish. It's working off at some weekly MRI top. But let's take a look. Maybe pull up the dollar, but let's go through it fast. I want to wrap this up in like 10 minutes.
Okay. So oil plummeting coming into the election. What are your thoughts on that, Tone?
I don't understand why. I can't explain this. I'm expecting this to be one of the best buying opportunities in oil right here because it's on an MRI buy. Is it down today as well? That's a 4-day chart.
4-day chart. So this is showing the first closes below the 200 SMA on the 4-day since losing it. And here's the thing, Tom. We look at weekly quite often, but honestly, I have found the 4-day chart to be really good in traditional markets as well. Look how important the 200 SMA is right back here in 2019. The price basically based off of it at $55 from May of 2019 until January of 2020, and finally losing it. So this is a change of behavior. We're seeing the second potential close below for the first time going all the way back, and that did lead to a massive drop in the price of oil. Let's see what it looks like on weekly. Same thing. So we've had one close below the 200-week simple moving average. The purple is bullish above it. So if it finds a low and gets back above here, it still has momentum. But this is it's bearish, and I've been finding natural gas to kind of act in reverse. Do you consider natural gas to be an inverse trade to oil?
I don't, but I don't consider it that way, but it's possible.
So let me remove these moving averages. I want to show you something that I have noticed when I see when I just open up a chart and it's on a relatively high time frame, but it doesn't really matter. And I see this group of lows here in March 2023 established at $2 and a nice move up, and then a strong drop down to lower lows, and then a consolidation. I can almost guarantee you when I turn on the RSI, we are going to see bullish divergence between price and RSI. Let's just see. There it is. Which at that point means it's possible this now becomes a much longer term low. and we're getting a W bottom to a higher low on natural gas. So this is looking relatively bullish, even though it's been kind of dropping into a bear market. But what I'm talking about, I might even have drawings on this. Yeah. What I'm talking about is connecting the 2023 lows at $2 to the lows in 2024 at 150, and I'm looking at RSI printing a higher low. So then, just because you have divergence, just because you have that in place, does not mean you're going to get it. This can always, RSI can always reverse to lower. You need to confirm a local low on the time frame. So how do we do that? Well, I would basically kind of have to look for these swing highs, almost this whole area of, let's just call it $2, back to $2. Then I would anticipate some of that hidden bullish divergence to start to play out. And I look for it to play out to the mid Bollinger Band. And if it's going to play out fully, it's going to play out to the top Bollinger Band. So this is this bottom off of the divergence got to move all the way swinging back to the top Bollinger Band. I consider that move fully played out for the most part. And now natural gas is trying to establish a higher low here to try and higher. And if it is inverse to oil, which I do believe it has been, it probably is going to stay a little bit bullish. Here's something to watch. If you look on my ticker, USO 2-year is 3.62, USO 10-year is 3.66. So there has been a yield curve reversion, which we can see here. And I've heard a lot of people talking about a recessionary soft landing. They're saying the soft landing has been placed. The yield curve has reverted. What do you think, Tone?
No, I don't think so. I think it's gonna spike back down.
I'm not convinced it's fully reverted either.
Let's see what happens after the rate hike. Or sorry, the rate lowering.
Yeah, and when is that rate cut? What's the date of that?
18, I think.
Okay. Real quick, I was looking at something in the Japanese markets, but I don't think it's super important right now. This is one chart I found really interesting. And Tone, this is where I'm going to challenge you a little bit on your, you have said for years that you get bullish on an asset when it gets back to a prior all-time high. And I understand why you say that, but my observation is that sellers and traders see that as a selling opportunity until it's very solidly confirmed as support. And we can see this. So this is called Vital Farms. Are you familiar with this company?
No.
This is
No,
so
but this is a very different chart. This is yes, I'm bullish at an all-time high, but not when it's coming in from a ridiculous low, right? Not when it's overextended when it gets there, which this clearly is.
okay. Let's see if the MRI helped us out on this top. Oh, look at that.
Like it went up to the all-time high faster than it fell from that initial thing, right? So this is the kind of chart where, remember, this is 50% correction of IPO kind of chart, right?
So this company Vital Farms, I buy eggs from them. They do try to put out relatively healthy food products. And
Right. Also, I would lower that line. Like I wouldn't use the swing high. I would use the tone vase method of best fit line without breaking candle close. And now it becomes a lot cleaner. And I think this thing is on an MRI buy. So this would be a beautiful buying opportunity for me.
I think so too, because look, when I add a horizontal right here,
Yeah.
it's Yep, it's dropping
Yeah,
right
it
to.
looks great. Zoom in on that. Like I can see that it's an MRI buy, but most people watching us can't, right? So it did a decent job with the MRI top. Not great, but not perfect. But I like this MRI buy. The moment it breaks, this is a weekly or a daily? Weekly. The moment it
Weekly.
breaks the weekly candle from 2 weeks ago, that's a beautiful confirmation. But I would be buying this now with a stop loss below the swing low.
Yep. I just found this really fascinating that that yeah, I mean I don't know, maybe there's nothing
It
fundamental
didn't,
to it,
yeah,
but
it didn't go up high enough above the prior swing high for that swing high to be support. But it's
right.
okay, right? Considering how fast it got there, that's perfectly fine. And this is a decent pullback. What happens when you put how big was that pullback from a Fibonacci retracement perspective, right? So just I would add the Fibonacci as a star. Probably
Yeah,
is,
all right.
right?
So you
Yeah,
want
it's
it.
down there, right? So you can go down and just click on that.
Yeah, I got it. You want the
Yeah.
Fibonacci from
No, 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 from the low to the top, from the low to the high. And there's two lows, right? So you can try both and see what happens.
so it's at the 486
What
retrace.
what the hell is a 46?
486. It's basically the 50% retrace.
Mark, you try from the low. Try from the ultimate low.
This
No,
low
the ultimate. Yeah.
still
Yeah, ultimate low to the ultimate high.
the ultimate high is still right at that 486.
Right. So we're at 50 basically.
50% retrace. Yeah.
Yeah, I don't like the 50. It would have been nice if it bounced off the 38, but yeah, it's fine.
But it's a nice,
I like it. I like it here.
it's a nice, yeah, I think it would be worth trying because it's kind of easy to manage your risk, right? If you could either wait for the MRI buy off of the weekly time frame, or take a risk, and you would just have to have your stop loss kind of somewhere below these swing lows, and
Yeah,
it would be a
yeah.
relatively small loss. But guys, let's take a look at the MRI. Look, it freaking nailed that top. Like, we did have a green star candle, right? But this is there are reasons why this is built into the indicator, because it is either going to resist price or it's going to accelerate price, which Tone has mentioned. Here is an example of acceleration with a close above. Here is an example of resistance. So I pay really close attention to these, which is why when really quick, going back to the price of Bitcoin, when we got this on the daily chart with the conditions in place, which it's a red star candle, so you should be short and adding. But this was a drop without a major correction. There was a bit of a correction here, but if I put the moving average on, we can see that the correction never took the price above the short-term resistance. So when I see this candle count is, I don't have the candles, uh I don't have the numbers on here. This was, I believe, a red 2. I love a red 2 or a red 3 at support after a 9 without a bounce. I love it. It's risky, very risky, except for it's not, because you can set a stop loss just below here. And again, when I bought this, like I mentioned at the early part of the stream, I bought spot. I wasn't buying a trade. I wasn't buying a levered trade or anything like that. I just bought spot for long-term accumulation, buy the dip strategy, dollar cost average. It's just part of a dollar cost average strategy that I do that is completely outside of Consensio, outside of MRI, um, buy signals, but we'll track these. I'll see if I can find some other examples, so maybe we can, because I think you could code this into the indicator at some point with I don't know how. I don't know how it could be denominated, but we can talk about that later. So let's wrap up, maybe taking a look at the 4-hour, see what's going on. Simple look. I just need Bollinger Band, 2 moving averages, 8 and 21. And we'll take a look. So this is generally bullish. And here's the MRI again, working magic. It's just resisting, resisting, resisting right here. Right. Tone, what do you call this?
That's my straight up resistance line.
Okay, MRI resistance. And
Yeah.
as we can see, it's doing exactly what it's designed to do. I love
Yeah,
it.
it's doing what it's designed to do. This is basically had the MRI top came in breaking that line, it's more likely that it would be a 1 to 4 candle correction with more upside into another MRI top and extensions. But by not being able to break that MRI resistance line, it's more likely that this MRI top will lead to an MRI buy opportunity at the downside. However, this particular MRI top happens to be in consolidation, which is bullish. So you do have a few, conflicting signals. The MRI top coming in a consolidated way is bullish, but the MRI top coming in below the MRI resistance is bearish. So they kind of negate each other.
Yeah.
But yeah, it's just another, something else to think about.
So, and this candle was a bit of a warning right here. It was a bit of a top shooting star, but
Yeah, I mean, like that's the kind of candle I want to see the MRI top on, and then there's no,
no
then there's
question.
no conflicting signals, right? That's a huge MRI top that I'm selling.
Right. Well, this is still generally bullish. We've got the Bollinger Band the median curled up, both moving averages above it, price above the short term. There are shorter term EMAs. There's actually a 3 and 5 that I check out sometimes, but I just like the 8. So now, real quick, I can almost not really. I was kind of thinking it was a bit of an ascending triangle, but it's not really. It's more of just like a a, a concentration, a consolidation. So now let's take a look real quick. Let me remove these. Let's take a look at the 50-50, and we'll do the 200. We'll do the 200 first, and let's see. So this is another really simple way of just knowing if we're in a strength or weakness on the time frame. So we're weak. Price is weak because the EMA is crossed below the SMA with the price well below both, right? So we can't expect to see strength on the 4-hour chart until, lo and behold, price is above $60,000. That 60K keeps popping up on every time frame. And this is what I love about technical analysis. Like, this is why I look at so many different things, because I get a high level of confidence in my levels when I have 5 different time frames with a few different looks giving me the exact same information within $100 or $200. So we're weak there. Let's see what the 50s look like. All right, so now we have hopium, because we have down here the 50 EMA crossed above the SMA. And it's really interesting to see that the price is it's acting as support, as it should be. When we've got the EMA above the SMA, it is more likely to hold a support. So what we want to see here is it's okay, even to come down here and drop back below 56K, even close a couple candles below there. As long as this cross is intact, there is an opportunity to gain momentum to push price back up to $59,000. So there is some bullish momentum building off of this low. We have had a low and a higher low. We've kind of had a higher high, but again, I would prefer I would prefer to see swings above at least $58,000 on the 4 hour.
All right, Mark, we're going back to Bitcoin for some reason. I need your 5 minute take on the S&P. We got off Bitcoin like 20 minutes ago.
All right, man. All right, S&P. This is 4 hour. We're dropping. Typical.
No, 4 hour, no 4 hour. Like daily, weekly, like
All right, here we are. Here we are on daily. Let's put the MRI on. Don't need that. Don't need that. Don't need that. So I had mentioned before, prior stream, looking at the election cycles, that September 1, late August, September 1 typically tops the stock market. Here is the top taking place on late August. So dropping into September, I don't see anything abnormal. I don't expect a lot of strength out of the S&P until probably right into the election. But I'm not seeing anything. I'm not seeing anything super bearish. It's just price correcting off of kind of this little bit of a double top here. Still holding above the weekly 21 EMA. That's bullish. Held down by the 8 EMA on weekly. Consolidating. It looks like it's going to be sideways for a while. That's all I see. What do you see, Tone?
Yeah, I mean, I always expect the stock market to have the best October being the best possible month. I still think the stock market is going to find a low, just like Bitcoin, in the next 6 weeks.
That is true, but elections, the elections show us. Let me go to the S&P real quick. Let me go to monthly. Okay. The elections show us that here is October 2020. It wasn't massively red, but it was red. Here is October 2016. That was red. Here is October 2012. That was red. Here was October 28. That was red. So pre-election Octobers, more likely, at least in recent history, here's one green one in 04, and here's a red one in 02. So going back 20 years, the greater probability is still to see a mildly red October, but not
Interesting.
Not a massively red. These are just election years.
Right.
Just election years. So this is my prediction for the S&P is we've got this wick. I believe October, I believe this month and October, they're going to explore into this wick a little bit, try to find a low, find a base, and then start moving up after the election. So I think that's good for now, Tone.
All right. Sounds good. Mark, thanks again for joining me on the channel.
You got it. There's another long one.
Let's jump off screen share. All right, guys. Hope you enjoyed this show, and see you all on the next one. I'll bring you a show tomorrow morning. Next week is going to be very challenging with the unconfiscatable event taking place in Las Vegas. Hope people can still come out. We still have room for you at the poker tournament and at the event itself. And otherwise, the next event I'm planning is the Financial Summit, the in-person Financial Summit. I'll be there as well. And thank you all for watching. I see Fiboswani was there with us. Also, Feral Analysis always joins us as well. Thank you to moderators, Mel and others. I see Planet Musk. I see lots of other usuals as well. Thanks, guys. Go ahead, Mark.
Real quick, Feral Analysis, I see a comment he made, and he's a Fibonacci master, as is Fiboswani. And he said the 786 times the 618 equals the 0.486.
Yeah, I saw that.
Okay. Yeah, it is actually a fib. It's basically the 50% retrace. I mean, you're talking about a few percentage, half a percentage difference, but I just like that. I like that just to get out of the box a little bit. Okay. That's all I got.
All right, guys, thank you all for watching and see you all on the next one.
Later.
Bye, everyone.